I think that's something people miss, right? Like, there's a step in between guaranteed cost and captive that's going to show how ready you really are to go have an actual captive. Because I don't think that if you're an agent who hasn't dealt in that realm before, you really understand the collateral requirements, how long that collateral ends up getting tied up in those programs. And I mean, I don't remember if I feel like we talked about this before, but my background prior to launching Florida Risk, I was in an agency where we wrote the master workers comp policies for PEOs. And I mean, that's the deal, right? When you're in a PEO of any reasonable size, you're going to be in a higher deductible program. And, when you get to a certain size, that deductible's $1 million per occurrence. So it sounds sexy, but what you don't think about if you're just used to selling guaranteed cost comp on the streets is you don't understand how the loss picks are determined. You don't understand what the collateral requirements are and how you meet those. You don't understand how long they hold that collateral and the fact you have to put it up on a yearly basis in most cases. And you're probably looking at 3 or 4 years before you start getting some of that back, depending on how things trend. But even more importantly, in where you could be doing work right now is having the ability to drive risk management processes and procedures into these companies so that they're managing their risk effectively before they're putting everything on the line and moving into a program like that.